Hey, it's Mac with priceactiontrading.com, and it's Monday. It is January 11th. This will be our chart lesson for today. And for the most part, this is just a range day. We did have a trend that started right about the opening, maybe just prior to the regular session opening. It's where it goes from gray to white here is the 8:30 a.m. regular session opening, and then where it turns to gray again is the 2 o'clock hour, which is really our cutoff. So that white area is basically our what I consider your safe trading hours. So actually, I take that back. I think you're all right to start trading around 6:30 or 7. I generally start trading around 7. So if you wanted to really show the safe trading on the white, this would probably start around 6:30 or 7. But I actually just started at 8:30 just so I know when the regular session opens, and then I know when the 2 o'clock hour comes because it'll turn gray again. And I don't recommend taking any trades, new trades. There's nothing wrong with managing a trade after 2 o'clock, but I wouldn't take any new trades after 2 o'clock. A couple reasons there. One is that the closer you get to 3 o'clock, you can kind of see how prices just, you don't really know what prices are going to do. There's maybe the last, as you approach 3 o'clock, your brokers are going to start kicking people out that are still in trades, and you could get kicked out of a trade when you're not expecting to exit. Plus, if you have a loss that late in the afternoon, it's hard to make it back. If you have a loss at 9 in the morning, well, you got all day to make it back. But if you have a loss at 2 o'clock, well, you really only got about 30 or 40 minutes to try to make it back there, because you need to be out by 2:45, because some of the brokers will start kicking you out at 1:45 or so. And you don't want to get kicked out. So especially if you're just before prices go where you're expecting. So I just don't think it's smart to trade much take a new trade after 2 o'clock. Again, if you're managing a trade, nothing wrong with that. Just make sure you're staying on top of it and so forth. But anyway, this was a range day. Just prior to the 8:30 open, we started trending higher, and we just basically trended up. We didn't even get back to the highs of the overnight. You can clearly see kind of the midline of the range here where prices were working off both sides. So it's just a range day, although we did trend up really from 7 o'clock, just prior to 8:30. So I'd say around 8 o'clock to 11:30 or so, and then we just trended back down again. So, but early on, this two-tier channel was really the play, this working higher here. So let's back out and we'll go through the trades. There's not a lot of them today. It shouldn't take too long to go through these. Nothing really out of the ordinary today. It's kind of straightforward. I mean, early on we were in this real tight range. Now we traded down into that. So what does that tell you? The odds tell you that you're probably going to trade if you break out. If prices continue to trend in one direction or another, they're probably going to trend in the way you traded down into them. So since we traded down, the odds are if we get a breakout that's successful, it's probably going to be down too. And if you just measure those two moves, I'd say it's that to there. And you can see we didn't quite get a measured move. It's real close. That would have been a good target for you. I always try to get out. If I'm managing a trade, I'm trying to get out. There's really not a trade to get you in down there, though. So you probably weren't short anyway. But 7 o'clock came actually right here where this first trade is at. Just as we're making this move down, 7 o'clock comes. And that's the second entry long. We don't really look for second entries in a tight range like that, but if you get a setup, the only way to trade this is to take some shorts off the highs and possible longs off the lows. Now, people always get confused on, they'll take these trades and they'll fail, just like right here. Technically this didn't fail because you would have got a scalp out of it. But people will say, well, how do you know if it's going lower? Well, you don't know it's going lower until it does. But there's some clues here that we might go lower. Notice that we had that bounce, it didn't go anywhere. And when this bounce comes back here, that's a high or low, and it makes a lower high and turns down, well, we're probably going lower. Unfortunately, there's not a setup to get short there, but it gives you the clues that we're going lower a little bit ahead of time, but you don't know for sure which way it's going to go. The only way you can play this, you just know that a bounce here is probably going to give you a scalp in most cases. And generally you want to wait on a high or low. Like right here, you had this big bullish bar, but notice how it's lower than this last couple of moves down. So wait on the high or low, which comes right here, and you get a much better entry here. You're not entering all the way back up in the middle. And even though this doesn't go very far, you still get your scalp out of it. So that's the difference. Make sure you understand that. It'd be the same. You just flip-flop all that coming off the top. Anytime you make a new low on a range or a new high on a range like here, wait on the lower high. Like this probably wouldn't have been a great short. Even though it works, you probably want to wait on a lower high, which comes way down here, and it's too late. So you might have taken this one because of the engulfing bar and been able to get in away from the EMA and on the breakout. But most likely you'd want to wait on this. The safer play is to wait on the lower high. So, and you don't get one there. Here you get the higher low. It's a quick, easy scalp, but you don't get anything more out of it. And then it's rocketing lower, and you just don't get another chance to go short down here, even though it went a little further. There's no setups here. So there's nothing you can do. And then, of course, we bounce. We get the failed breakout. We've been away from that EMA a long time, and the odds are we're probably going to bounce. That's one you might argue that could be green. They're going to fail sometimes on you. Like right here, if you'd have tried to enter right there, that would have failed on you. But a lot of times when you catch these, it's an important low. And once again, if you catch this, you get to ride. I mean, that's the low of the day, really. Still the low of the day. And you could ride this thing, depending on how you manage your trade, all the way up. So anyway, you may go long right there. Then, of course, you get a first entry short, a second entry short. It fails. This is not a great reversal pattern because it's not above the EMA. However, we're back inside here. Notice we made that low, and so we come back and we test it a few more times. So it gives you confidence that, hey, this support's holding, and it's a little double test there. So you may take that trade. It's still a little aggressive because it's kind of congestive too. But that being below the EMA there is the problem. So you're just kind of stuck between the support level and the resistance level, which is the EMA. But it pushes on through there. When it tried to go lower twice and failed, there's a good chance we're going higher. And you can see how it rocketed up right there. All the shorts realize, hey, something's changed. We got to get out of here. And that's what causes that one huge aggressive bar or a really large bullish bar with a lot of momentum is what I'm trying to say there. So that's what causes that bar, because all of these people that were getting short, a lot of people got probably trapped on that second entry short. And you don't want to go short there because we've bounced there twice recently, and this was a range here, and we've more than moved a measured move on the range as well. So not a good place to go short at all. If you're going to do anything here, just sit tight and don't do anything. And when it fails, you may go long there, but you don't want to be going short right there. Get the two legs up, and then it works down. And again, you don't really get a short. This one is pretty tempting right here. Again, it breaks higher and turns down. After two legs up, it's actually a little more than two legs. So, and really what prices are doing here, notice when we push through, we didn't pull back and test that. We come back and test it. Prices will always come back and test that. Usually it'll be pretty quickly. It took a little while to come back, and so when it turned, so after we test that, there's a good chance we're coming back to the EMA. So that's another one you could argue that maybe it'd be green, especially if you entered on an engulfing bar, because this broke higher first and then turned and went down and went out the other side. So when it went out right there, you could go. I wouldn't wait till this bar closes. It's just so big. Let me make this a little bigger. I mean, that bar is really big, and if you get it wrong, I mean, that's 18 ticks on that one bar. So when it breaks higher and turns down, it goes out right there. That far away from the EMA, maybe you take it. And of course, you want enough room back to the EMA, which you have there. And it just kind of worked its way on down. Still no setups. There is a failed second entry long right there. Um, that's the first break of this yellow channel, so I wouldn't treat that like a reversal yet. If you take it, it works, but I wouldn't take that trade. There's not a lot of room back to the lows either. I mean, there's enough room to scalp out there, and you see that's where we go to, and then it bounces again. Again, I wouldn't go long there. That's a fairly bullish bar, and you do get a break in a new low. Um, but I don't think I would take that trade. It looks too congested. I mean, that's not rejection off these lows. We're just kind of going sideways. You want to see rejection. Then we just get in this range. Notice we come up, we make that first high, and then we make another high, and this actually originates way over here. You can kind of see that. So you get a true double test right there, or triple test, and really, even if you don't want to count this one, you get another triple test here. So I like going short right there. Again, I don't think you want to go long. There is a second entry long here, but we're in this range. But I'm just not crazy about it, because really at this point you don't know the lows of the range are here. You'd probably think they're more down here at this point, like so. I ended up moving them up later because you got more touches there, but at this point you really don't have there. It is a second entry long, but I'd skip that one. We come back up, we test this again, and you got a true second entry short, nice signal bar, and then you don't get any more bounces. You actually come back and test this again and get a true triple test, and again it's a second entry short, very bearish bar. And then finally you get a bullish one down here. Again, this low is, notice how you got these highs in here between this one. Because somebody else sent me another setup similar to this, but it failed on them, and they couldn't figure out why it failed. They were saying it was a triple test, because you could say, hey, that's a triple test. We made a low, we tested it once, we tested it twice. But look in between there, and this is where your support was. So this would be just a new low here. Anytime you make a new low, you're better off to wait on the higher low to see if you, to make sure you get a higher, just for more proof that you're going higher. So this is the preferred trade. Although you may take this one, it is a second entry, and it is a failed breakout. It is a nice bullish bar. There is plenty of room back, but because it made that new low, you're probably better off to wait on this higher low, because these will fail sometimes, just the way it is. So make sure you understand that. I mean, this looks almost exactly, maybe this was the trade he was talking about. I assumed it was from a previous day, but maybe this is the, no, I'm pretty sure he asked about a different day. So that almost looks like the exact same thing from a different day. But hopefully you understand that, why that's not a good choice, not as good a choice as this one, because these will fail. But we get a breakout here. You don't want to trade breakouts. You're expecting prices to probably fail here, but we just go in this tight range, and there's not room to get out going long or short. So you really, there's no trade through that whole thing. If this would have been a nice bullish bar, maybe that's the first one that you got room to get out. None of the rest of these do you have room to get out, or a good signal bar. Fine. And again, we traded up into this, so we'll probably succeed going long here, which we did. And then it fails on that breakout, and you kind of go sideways again. And you can see that right across there. I don't know why I got that mark there. There's no setup there, so I don't know why that I put that there. But anyway, You come back up and you just go sideways there. There is a lower high right here, but you don't have room to scalp out. It's just congestion. There's just no entry in that tight stuff there. And notice it does go lower, which is kind of what you would expect, especially being that far away from the EMA. And it runs all the way back down and it finds its support back down here, this original low. But prices don't really stay in that. They bounce right out. You get a first entry and then you get a second entry here, and this actually broke higher and turned down. And you would expect prices to come back down here. And notice that we get a little breakout here. I still mark this as green. It's a second entry long. And it did break lower first and come back out. And look how far away we are from the EMA. This would have really confirmed this trend line. It didn't hold. I guess you could say it did hold, but it gave way momentarily. So it kind of throws you off, and it doesn't really give you a technically, you confirmed it here because you got your 1, 2, 3 test, but this was your first break of it. So you're expecting prices to go higher again. And just the fact that it's a second entry that far away from the MA, you may take that trade. I can't ever seem to not grab the wrong spot. And that's the only chance you get to enter that. This thing really takes off here, and then we're just working sideways again. Again, there's no setups there to play that range. We break out. Of course, we traded up into this, and notice when we break out, we go higher. And you finally make a high here, then you make a lower high, and this is basically a double bottom, so that is a first entry, second entry short. And this thing, the bottom just falls out. It turns out to be one of the better trades of the day. The bottom just falls out of it. So it's a second entry short. It's also a failed second entry long. You back out a little more. Notice that high. First entry there, second entry. And then off it goes. And this, you just got a first entry here. I think that's too risky. Wait on a lower high or something else, and you get a lower high here, but you can't go short right into that support with the congestion right there. And technically, you could call that a double bottom, then a first entry, second entry. But again, it's just too sideways there. I don't think there's any trade there. I think it's too risky. And then same thing here. You've already had your, really at this point, you don't have this yellow channel. You just have this blue, and there's a possibility because you draw it out with those first two trends or first two swings. And there's a possibility, but until we come back and confirm that, we're just playing this channel right here. Now you got a break and two clear legs down. So there's a chance you'll get trapped here. And I actually like when it fails, when you get that second entry short, it doesn't go anywhere, and it actually breaks lower right there and turns up. I like going long. It's aggressive, but we're probably, if this yellow channel is going to be correct, we're going to go back to this trend line here, and that's exactly where it goes. But really, you're just playing the short trap here is what you're playing. And that takes us into 2 o'clock. Nothing else here. There's a second entry short. Where is it? It's right there. Technically, that's not even a second entry because the second entry's here, and that's still part of that same move. But a lot of people will try to count that. They'll see that. They'll see this low and go first entry, second entry. But technically, it's not because there's your new low. First entry, second entry. So that would be a third entry, fourth entry. And you don't want to be going short on a fourth entry. You know, the only thing you got here is we did push through the midline and the EMA, so you'll probably come back and test them, which you get both. You test them both on that pullback, but I still don't think that's worth the risk of a short with this trend line working up there too. It works, but a lot of times it won't. And that, again, that takes you into 2 o'clock, and that was it for today. So not a lot of trades today. Again, it's a range day. We did have a nice trend that lasted from about 8 o'clock to 11:30, 12 o'clock, something like that. So 3.5, 4 hour trend right there. And then we trended down into the close. Had a little bounce here right at the end, but the only really chance you had to catch that was here, though, because there's just nothing else here, at least not on my chart. So, but anyway, that's what I saw today. And again, not a lot of trades. There's a couple of pretty good ones. It gets when you these kind of days are hard because what happens is you get in these tight congestion areas, and then you zoom up, and then you go back into tight, and then you zoom down or zoom back up, and it goes. And so if you don't get a setup to catch those big quick moves, you can't enter these. And because once it's going, you don't want to enter it. And then when it slows down, it goes back just like right here. You just didn't get a chance to enter this all the way up, and then it's going sideways, and there's no chance to enter here safely. And so you just kind of, even though prices are trending up and you're getting some really good moves, you just don't get any setup. So don't beat yourself up when you can't get into these. That's where a lot of new traders will make a mistake. They see these big moves and they want to participate in them, and they get flustered when they can't catch them, and then they just throw a dart at a board and they get stopped out. Like here, you'll see it happen a few times. You say, okay, if it does it again, I'm getting in. And then you get in, and guess what? Then boom, it's zooming down, and you got a loser. So you can't chase these bad trades, and you can't let these good moves that don't give you an entry upset you, because that's just the way it is. And that separates a really good trader from a losing trader, or even an average trader, is just being patient and saying, hey, I see the market's really moving strong here at times, but I haven't been able to catch it because there hadn't been a good setup. That's what a good trader will do. So make sure you understand that. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.